Good morning. I thought today we could have a quick look at what one might expect from the markets in 2018. And this is a piece I wrote for The Star. As a macro investor, my job for 30 years was to anticipate changes in the economic trends that were not expected by others and therefore not yet reflected in securities prices, so said Stanley Druckenmiller. Mr. Druckenmiller, who with his partner George Soros is a man worth listening to, has made a lot of money for more than 3 decades. My most vivid memory was around the time when I finally arrived on the trading floor at Credit Suisse First Boston in the very early 1990s and watched Soros and Druckenmiller lift £1 billion off the Bank of England on Black Wednesday in 1992. I admire folks who can spot the anomaly, seize the opportunity, and make away with their profits. To do all three is not an easy thing. I also discovered that Stanley had shorted. Short selling is where an investor sells an asset and profits if the asset price subsequently falls. He had shorted Christo Wiese's Steinhoff at a time when every South African commentator and asset manager was long up the wazoo. So in this article, as promised, I would like to anticipate what might happen in 2018 and where we might seek to profit. The caveat to this article is that markets are not static. Markets are in fact incredibly fluid, and I for one believe in an active strategy, which means the portfolio can pivot at any time. Last year I made Bitcoin my number one choice, and it rallied close to 20-fold before correcting and ending the year up 1,300%. I am no longer bullish Bitcoin. In fact, I am bearish. The structure of Bitcoin is, however, one that lends itself to being short squeezed, and being short squeezed is not a pleasant sensation, let me assure you. For 2018, the portfolio will look to be short Bitcoin on a tactical basis. Against that Bitcoin short, I will hold a small long in Ripple, which is another cryptocurrency which looks like it might become a serious payments platform. This component of the portfolio will be capped at a 7.5% ceiling of the total value, notwithstanding that the millennials have become a serious player in the global economy. Look at avocados if you want further confirmation. Commodity markets ended 2017 real hot. The Bloomberg Commodity Index, which measures returns on 22 raw materials, closed up 11 days in a row and rolled that into January, resulting in the longest run in records dating back to 1991. WTI crude traded above $60 a barrel, which was the highest level in 2 years, and I think we're just shy of 62 now. In November, I turned bullish on oil and am forecasting a further run higher towards $65 a barrel in New York. The portfolio will therefore look to bag that gain in 2018, and looks as if it might bag it very soon. Once we strike that level, the portfolio will switch to flat. I expect this gain to be booked in Q1, which gives us a substantial gain when you annualize it. The component is capped at 12.5%. Western economies have been experimenting with lashings of quantitative easing. This money printing experiment has suppressed government bond yields. The center of this monetary experiment has held since 2009. I propose the portfolio bets about 2.5% of its value on deep out-of-the-money put options on a basket of 10-year bonds. This is an insurance policy with a high payout. The currency markets remain the most liquid markets in the world. Over $5 trillion trade daily. In 2017, the euro rallied about 12% against the dollar. The Mozambique Metical rallied about 20% and was the best performing currency in the world against the dollar. It is proposed that 30% of the value of the portfolio is allocated to FX. The portfolio will own the euro. I look for 130 plus in 2018. Will own the rand as its main long-term holding. I believe the rand has been savaged by President Zuma, and that as President Ramaphosa will mean an erosion in the Zuma haircut and a substantial reprice in the value of the rand. I also propose we hold some Meticals. The portfolio will also keep funds aside to be traded on a tactical and short-term basis. Opportunities abound in the FX markets. The frequency of flash crashes in the early hours has been unprecedented. The FX markets are a 24-hour market, and whilst I propose to get some shut-eye, I also propose the portfolio allocates one human resource to monitoring things whilst the world sleeps. Equity markets have been in a golden Goldilocks era. We have seen prices rise almost in a straight line throughout 2017. President Trump has cloaked his administration in the righteousness of the markets. For example, the FANG stocks like Amazon, Facebook, Alibaba led the charge as they remade the world and its economy in their image. Valuations are now rich. I prefer to look for opportunities below the headliners. I like Twitter at $24, and I like playing Tencent through Naspers. I'm keen on looking for purely digital-based banks that can seriously apply artificial intelligence across billions like Facebook have done. Up to 30% of the portfolio will be applied to the equity markets. The residual balance of the portfolio will be applied to the frontier markets. One of the reasons I returned home to Kenya was because I believed that someone like myself should be able to create an edge. In the business, a subtle but crucial informational advantage was called edge. Richard Holwell, a former federal judge in New York, told the writer in the New Yorker that in order to evaluate a technology stock, hedge funds sent people to China to sit in front of a factory and see whether it was doing one shift or two. He added, an edge is the goal of every portfolio manager. I like what I'm seeing in Angola. I'm keen on being long Angolan risk. The devil is in the detail of the execution, however. I would probably look to be long Angola Eurobonds. African stocks had an alpha year in 2017. I like South African banks, which I believe are steeply undervalued and still carry Zuma haircuts. And the portfolio will have some Standard Bank. Here in Kenya, the portfolio will stay long Safaricom. I believe geographical expansion and e-commerce have not yet been properly baked into the price. I look for about 30%. KenGen, I'm looking for 35%. Dividend passes have weighed a little. And I like Standard Chartered and Barclays Bank Kenya, looking for 25% on both. And a small slice of higher beta via Uchumi. I wish you all a profitable year in 2018.